Very good morning, good evening, all of you. Can you please confirm if the audio and the video is clear to everyone? The screen is properly visible and clear. Good evening, everyone. Can you please confirm if the audio and video is clear to everyone and the screen is properly visible and clear to everyone? Okay. Thanks, Ranjani and Tushar, Shivam. A very good evening to all of you and welcome to the our ACCA FR practice to pass session. Now what I will before starting the discussion on the practice to pass, let's have a quick round of discussion about FR, about the exam, and then we'll move on to the ACCA practice to pass sessions. Okay. Now understand, guys, this session will be more of exam oriented, and in these sessions we'll be discussing one past paper. Okay, in this session we'll be discussing one past paper, and the past paper which we'll be discussing in this session will be March June 2022. That is the latest exam paper, the latest exam paper. Now guys, understand that before we discuss that, you must understand that in these sessions we'll not be revising each and every concept that we have done in the past revision sessions. Okay, so if you want to revise each and every concepts, I will strongly recommend you to watch the revision sessions that I've taken in the previous attempts. Okay, so the link and the notes for which will be shared in the WhatsApp group right after this class. Okay, that I'll share in the WhatsApp group where you guys are connected with me. Okay, I'll share the link for the notes and the link for the classes, wherein we have covered the revision of all the concepts, that is all the standards, and also we have taken up important questions and during that session, and it is not for more than, I think, 12 to 13 hours. It is only of 12 to 13 hours. Okay. Varun has a query. These classes will be uploaded on your YouTube channel or not? Varun, yes, this will be uploaded on the YouTube channel. Okay. Now after this classes gets over, within 24 hours it will be uploaded on the YouTube channel as well. Okay. Now, okay, before we start the discussion again, understand, guys, let's talk something about the FR exam. As you know, the FR exam paper is divided into three categories, right? Three sections, sort of, you can say three sections. Now section A, section B, and section C. Now what happens in section A, we do have 15 objective type questions, and each question is of 2 marks, right? So it comes to 30 marks. Now here what happens, we do have three case study based case study, and each case study will have 5 objective type questions which are linked to each other. Okay, so what happens, multiplied by 3, and each question is of 2 marks each, so it becomes again 30 marks. Now in section C, you will get two questions. Okay, that is question number 31 and question number 32. Question number 31 and question number 32. Okay, which will be of 20 marks each. Okay. Now, so what is the total? 30, 60 and 20 is 80 plus 20 is 100. So the total is 100. Now also we know that from in section A and section B, we might get a question either from the, you can say, the standards, or you might say from the conceptual framework, or might be from any other topic which is other part of the syllabus. But in section C, okay, we know that a question can come only from 3 topics. And what are the topics? What are those topics for section C? In section C, question can either come from single entity, Okay, the question can come from that is the preparation of financial statements. Okay, now the question can come from group accounting, or the question can come from you can say interpretation of FS. Now there is okay, just assessing the past trends. Whenever a question has come up in section C, they have tested it like this: either this and this, or this and this, meaning thereby this is mandatory. So what we can do here is we can write and here, and or here, meaning one out of two, and this one is mandatory. So in every attempt we have seen a question coming up from the interpretation of financial statements. Okay, so this becomes a very important topic for the exam. Now guys, understand, though in this practice to pass session I'll be taking up one exam paper, that is if you can see here, March June 2022 question paper I will be taking up. But before I discuss that March June 2022 question paper, I want to give you an understanding of how you should go ahead in the revision going forward, because see, it's 26th today. Now your exams will be held on 9th, right? So you have around 10 days. Okay, now how you should manage your studies in this 10 days is the question, right? Jacob is asking CA final classes. Yes, it will be uploaded soon. There were some challenges, but yes, we will upload it soon. Okay. Varun, whatever doubts you have in the topics that we are discussing as of now, you can discuss it as the classes are being conducted. Okay. Please make it an interactive session. Okay. Now, understand. As I told that a question can come from 3 topics, but what I have done here is, for each of the topics I have identified the type of question that has been tested in the past 10 attempts. Okay, see, as I told that a question can come from a single entity, question can come from group accounting, and question can come from interpretation of FS. Now understand, what are the type of question that can come from these topics? Single entity. Whenever a question comes on the single entity, that is the preparation of financial statements, the question will give you a trial balance. Plus it will give you certain adjustments. Okay, now what are the type of requirement that has been tested so far pertaining to single entity questions? They are, listen to me carefully here. Okay, to prepare SOFP, or to prepare SOP&L, okay, or to prepare SOCIE, that is statement of financial position, or statement of profit and loss, or statement of changes in equity. Okay, or it can be, they can ask also the extracts of cash flow statement, and also they can ask statement of adjusted profits. Now what is the meaning of each of them, I will explain, don't worry at all. Okay, Now SOFP means what? See, they will definitely give you the trial balance and they will give you adjustments, and they will ask you that after making these adjustments, after giving the effect of these adjustments, prepare a statement of financial position. Similarly, for after giving the effect of these adjustments, prepare a statement of profit or loss. And similarly here SOCEI, that is, after giving the impact of these adjustments, prepare a statement of changes in equity. Now extracts of cash flow, they might ask you to prepare the extract of cash flow from operating activities or from investing activities or from financing activities. Very rarely you can see a question being asked from all the three activities, but yes, more frequently you can see a question being asked from either one or two of the activities. Okay. Statement of adjusted profit. So what will happen? The question will give you in the trial balance the draft profit. Okay, and now in the adjustments there will be adjustments given. So you have to give the impact of those adjustments to the draft profit and calculate the amount of final profit. So what you have to do is you have to start with the amount of draft profit, then you have to give the impact of adjustments, that is a rectification to be done on account of the adjustments given, and then calculate the amount of final, that is the correct profit. Okay, which will again go to the P and you can say the SOFP. Okay, and you have to prepare SOFP also. So this is these are the type of questions that has been tested in the exam from single entity. Definitely they will not ask everything in a question. They might ask SOFP and SOPNL. They might ask SOFP, SOPNL, SOCIE. They might ask SOFP and statement of adjusted profits. They might ask SOFP, statement of adjusted profits and extracts of cash flow. So they might ask either two or three, any two or three out of these. They might ask any two or three out of these. Is that clear, everyone? Now I totally understand guys that in this limited period of time definitely you will not be able to revise all those questions. So what I have done is I have identified the questions. Which the examining team has recommended you to solve. It's not that I have I am recommending you to solve. No. These are the questions which are recommended by the examining team in the examiner report. Okay. So now what are those questions? The questions are Vernon Company. The questions are Dugan Company, and the question is Haverford Company. Now comes the question, where will you find these questions? So these has been tested in March, June 2019. This was tested in September, December 2018, and this was tested as part of March, June 2018. Now, if you are unable to find these papers, okay, what you can do is either you will find these questions as part of your BPP material or Kaplan material definitely. Okay, and if at all you are unable to find it off, you can do reach out to me. I will share that with you. Okay, don't worry. But yes, don't come to me without trying. Okay, so first try. I think all the three questions are available in BPP and Kaplan. Okay, cumulatively. Okay, Haverford is available in BPP. Dugan, I believe if I can recall, is not available in BPP, but is available in Kaplan. Okay, so you will find definitely in either of the books you will find these questions. Now coming to group accounting. Jerry's code is saying that I am new now. What is the topic being discussed? So Jerry, the topic that is being discussed is I am just discussing about the paper. Okay, and I have discussed so far about the single entity. Okay, so don't you worry at all. If even if you have joined right now, the part which you have missed, you can watch the recording for that part. Okay, don't worry at all. Definitely, I will not be able to repeat it off, but yes, you can watch the recording for that. These sessions will get uploaded on the YouTube. And but yes, don't leave the live session, because in the live session you will have an option to ask or discuss your queries. Okay, so please continue in the live session, all of you. Now, group accounting. So now, what are the type of questions that can come in group accounting? Understand, in the group accounting, they can ask you to prepare console P&L. They can ask you to prepare console statement of financial position. They can ask you to prepare pen console P&L, console SOFP, or you can write here console statement of changes in equity. Question can also test you on a loss of control perspective. Okay, now the question can also test you to ask you to calculate investment in, what is the balance of investment in associate using equity method. These are the type of questions that can come in the exam. See, definitely again I'm reiterating the same fact that not all these points will get tested in one question, okay, but yes, definitely either 2 or 3 out of these will get tested in the exam. Okay. Now coming to interpretation of FS. Now, not before I go to interpretation of FS, I have to take up the list of important questions for group accounting as well, right? So let me take that. Group accounting, the questions which you have to solve before the exams is Bicomb company, that has been asked in June 2015. Then Dargent, March June 17. Okay, then Party company, September December 17. Then Runner company, September December 19. And then Laurel is December 18. Okay. Now, so these are the questions which you can practice. See, console, so see, when I write, I mean to say console reserves. Okay, they might ask you to calculate the value of console reserves, not the whole movement of it. Definitely, see, though they have not, but they might ask. Okay, I'm just writing all the possibilities. Now, interpretation of FS. Now, understand the type of question that can come for interpretation of FS. They might ask you to compare a company year on year. Okay, let's suppose there is a company called Infosys. The performance for the financial performance is given for 2021 and it is given for 2022, and you have to assess the same company for the year on year how it has grown. Okay, now compare the company with a sector or industry, meaning thereby, let's suppose Infosys is into IT sector, so compare the growth and the future perspective of Infosys with that of the IT industry as a whole. Now further, there are two companies, and you have to analyze which one is a better target company, which one is a better target. Meaning thereby, let's suppose I am confused, it will say, the question will say like this: I am confused between these two companies A and B. Now you as a student have to analyze and help me in deciding which company should I invest, either A or B. Now you have to compare the two companies A and B and tell to the give us a conclusion which one is a better target company. Now further, they might ask that I have acquired or disposed of a company during the current year. So was this decision a good decision or a bad decision? Was this decision a good or a bad decision? Now understand, here in this case, it was asking you to make a decision. Okay, which company shall I invest? Okay, which company shall I invest? And here it is saying that I have already invested. Now you tell me, is this investment a good decision or not? Okay, so this is what. Now the questions which you have to solve for interpretation of FS is: Mower, September, December 17, Bun, September, December 19, Punject is March, June 17, then Duke is September, December 18, then Grigori is September 16, then Perkins and Perlo, March, June 18 and March, June. These are the list of questions. Okay, how many? 1 2 3 4 5 6 4 5 6 7 8 9 10 11 12 13 14 15. These are the 15 questions which I believe will cover each of these types. Okay, if you solve these 15 questions, what I have done here is it covers each of the type. If you come to SOFP is covered, SOPL is covered, SOCI is covered, extracts of cash flow is covered, a statement of adjusted profit is covered. Like similarly here also and similarly here also, each of these types are covered. Okay, so what I have done is this analysis I have done, okay, for you guys, so that it becomes easy for you to cover the whole of the concepts at least once before the exam, so that you are not blank in the exam. Okay, and so these are the master questions, you can think of it. Okay, so I believe that whatever questions you have planned to solve from now onwards, definitely solve that. In addition to that, please give a priority to these questions as well. Okay, please give a priority to these questions as well. Is that clear, everyone? Okay. Okay, Muskan is asking, where will we get the questions of group accounting which are not in BPP kit? Either you can get in Kaplan, or you can get in specific exams, or you can get in practice exams. Okay, these are the areas where you can get these questions. Okay, you have to little bit work. You have to work little bit. Okay, you can't get easy lunch now. Now, is this understanding clear, everyone? I have just discussed from a section C point of view here in detail. Is this understanding clear to everyone? Come on, guys, tell me. Okay. Now let's start the discussion of question of March June 2022. March June 2022 question paper section is section C. Okay. Now understand, guys. Definitely we will be solving this question in the exam in ACCA practice platform. I'll be solving these questions on the ACCA practice platform. But yes, first I'll discuss it here, because all the rough work I'll do it off here, and when it comes to the exact solving the question, I will solve the ACCA practice platform. Now many students have a understanding that sir, from where to get the past papers. So now I'll show how exactly you have to get the past papers. Okay, please see. This is your ACCA global website. Right, can you see the accglobal.com? right? Now here please note the steps, all of you. Please note the steps, all of you. From here you have to go to student section. Now from students, scroll down, come to study support resources, click. Yes, Muskan, I am telling that only. Okay, please see the class now. Now once you come to study support resources, come to ACCA qualification. Now what is your paper? Financial reporting. So select financial reporting. Now you are in the financial reporting tab. Now from financial reporting tab, what you have to do, you have to go down, a little bit more. Now see here what is given, past exams, and see here this one, past exams and question practice, past exam and question practice. Now you have to click this one. Okay, Now it will ask you to log in to the ACCA practice platform. See, can you see here? Log in to the ACCA practice platform. Right? Now log in. This is what is the opening ACCA practice platform. This is your ACCA practice platform where you have to solve the question. Now tell me, which is your paper? Financial reporting. Come to financial reporting. Okay, plus ACCA official resources blank workspace. What is the meaning of blank workspace? See, there ACCA gives you two options. Okay, if you want to solve questions, now see, ACCA is giving you solve questions also. What? Past exam library. See, all the past exam questions are there. March, June 2021, March, June 2022, September, December 2020, September, December 2021, September, December 2022. Right? Everything is given here. Everything is given here. Okay. Now you can out of see how many parts last 5 attempt paper is given. Not only this one, plus also ACCA gives you practice exam 1, practice exam 2, and FR March 23 pre mock exam. So 5 plus 3 8. Now further, one specimen exam means plus 1 is 9. So ACCA gives you 9 exam papers. 9 exam papers. If you practice 9 exam papers before the exam, nothing much is required. Nothing else is required, guys. Nothing else is required. Okay. Now we are discussing which paper, guys? We are discussing which paper? March, June 2022. So what we have to do, we have to assign it ourselves. It was already assigned to me. It was already assigned to me because I was taking a class in the last batch. Okay, so it was already assigned to me. Now I will unassign it, and then again I will assign it to myself. I will assign it to myself. Now as I assign it to myself, see, now it will come in my portal. ACCA past and practice exams. Click here. Search June 2020, March, June 2022. See here, March, June 2022. March, June 2022. Okay. See here, March, June 2022. Right? Question. Now you have to it's coming resume because I was working on it on the other day for the classes. But yes, okay. Now, so as soon as you click, what will come here is, I'll show it to you guys. Don't just give me a minute, please. Now, as soon as you click, it will show you the questions. Okay? They will definitely show you the instructions also, but since I have already opened these questions, this paper in the past, so it is not showing me those instructions. It's directly showing me this one. But if you want to see how exactly it will happen in the exam, I'll show that as well. Don't worry. Just give me a minute. I'll show that also. I select any other paper. Financial reporting, ACCA resources, past exam library. I will select any other paper. This one. Assign it to. Okay, or past December 22. Now, okay, if I click on start, see how does it show. These are the instructions that they will show. Okay, which definitely I believe you should read it at least once, not every time, but at least once you should read it now, so that in the exam you are not worried about reading all these things. Okay, these are the instructions which is being given here. Okay, at least once you should read these instructions. Okay, now once you click start, yes. Once you click on yes, the exam timer will start. Here these are not time based. Okay, these are not time based, but in the exam your timer will start as you click on yes. Okay, so since this is not time based, so no timer will start. But yes, I will strongly recommend you guys, even though these are not time based, but still in your mobile phone, you should open a stopwatch. Okay, stopwatch. Okay, for 3 hours. And okay, since these are only section C, for section C is for 40 marks, right? See here, the whole question is of 100 marks, and we get 3 hours for each, which means 180 minutes, right? Which means 180 minutes. So for 1 mark we have 1.8 minutes. So for 40 marks, how much time we have? 40 into 1.8 is 72 minutes. So 72 minutes you have to keep an alarm or a stopwatch or whatever you want, timer of basically 72 minutes, and solve in these questions in 72 minutes. Now when you start off the first with the as you will start with the first mock exam, you might not be able to finish within 72 minutes. It might take 100 minutes or 90 minutes or 95 minutes, but gradually this timing will reduce and it will come to 72 or 75 minutes. Okay, and that's fine. So is that clear now? How to reach these exam papers? So Muskan, is your query clear now? How to get these questions? To insert a cell, we'll discuss that also into. Okay, we will be solving a question specific in this practice. The two questions which we are solving for March June 2022 paper will be solving on ACCA practice platform only. But yes, when it comes to explaining that question to you, I will explain on the OneNote file. Okay, so that I can explain better. Okay, but yes, when it comes to solving the question, I will solve the full question in front of you in the ACCA exam practice platform. Okay, so don't worry at all about that. Each and every query I will take up. Okay, so I will be solving this question. This question we will be discussing tomorrow. Okay, I will be solving this question today. I will be solving this question today. Okay, this question pertains to single entity. This question pertains to single entity. And now in single entity, what did I say? Tell me. In single entity, what did I say? A question can come. The question will give you. I'll show here. See, just give me a minute. See, I clearly mentioned that the question will give you trial balance and adjustments, and they might ask you any one or two or three out of it. Okay, right now see what is asked in the question. Now see what is asked in the question. See, it's a trial balance that is given, plus the adjustments are given. Now they are asking SOP&L and SOFP for 20 marks, right? That's what is the type of question that can come in the exam. Now what we will do is I'll move on to my OneNote. Now the question is with me here also. So now what we'll do is we will read the question properly and we'll try to solve the question here, and then we'll make the final requirement, that is the P&L and the financial position in the ACCA practice platform. Is that clear to everyone now? Come on guys, please confirm. Please give me a confirmation so that I can move ahead in the class. Okay, fair enough. Now let's read the question and try to understand that. I'll be going slow, don't worry at all about it. Now, Print company is a manufacturing company and has the following trial balance on 30th June 20x2. Okay, the trial balance is at 30th June 20x2, means year ends on 30th June 20x2. I hope it is clear everyone. Now it says equity shares is given, other components of equity is given, retained earnings is given, plant and machinery is given, land is given, bank loan is given, trade and other receivables is given, trade and other payables is given, cash at bank, revenue, production costs, then admin expenses, distribution expenses, finance cost, inventory is given as 30th June 20x1. That is the opening inventory is given. This is opening inventory. This is opening inventory. Okay. Now coming to the adjustments. The first adjustment will deal adjustments by adjustments. Okay, no hurry. What does it say? On 1st January 20x2. What was my year end, guys? Can you please tell me? I need 100% participation in the class. That's the whole intent of taking a live class, guys. Okay, otherwise I would have uploaded a YouTube on the video on the YouTube also. If I'm taking it live, so please interact with me. Now tell me what was the year end? What was the year end? The year end was, tell me guys, come on. 30th June 20x2. What type of name it is? Liquidus. Now, on 1st January 20x2, print company raised funds of $30 million. The full amount was recorded in the nominal ledger as a bank loan. Okay, fine. Now it says the funds actually consisted of a bank loan of 16 million and 14 million from the issue of $7 million one ordinary shares. Okay. Now it says I have raised funds of $30 million. Now it says $16 million is through a bank loan, and $14 million is through issue of equity shares. Okay. Now, how many equity shares, guys? Come on, tell me. How many equity shares? 7 million equity shares. 7 million equity shares. Okay, at $1 each. Of $1 each nominal value. Of that is par value. That is par value. So now, can you tell me what should be the journal entry? What should be the journal entry? So journal entry should have been bank account debit to bank loan to equity share capital to securities premium. Okay, now see in the bank how much I have got? 30 million, out of which 16 million was loan. Right now I have issued 7 million equity shares. The par value is 1, so the equity share capital will increase by 7 million. Now see, for issue of 7 million equity shares, I have got 14 million. Means what was the price at which the shares have been issued? What is the price at which the shares has been issued? Come on, guys, tell me. What is the price at which the shares have been issued? One. $2, right? So but 1 out of which was par value, right? So what is the securities premium? What is the securities premium? 7 million multiplied by 2 is the issue price, but 1 was the face value, so the securities premium becomes 7. So is this journal entry clear? Now this is the correct journal entry, but what they have done, see, what they have done is they have recorded the full amount in the nominal ledger as bank loan. Is that correct? Is that correct? No, that is wrong. So now what they have done is, see, this is the correct entry. Understand, guys, this is the correct entry. This is the correct entry. Now what is the wrong entry that they have passed? What is the wrong entry that they have passed? The wrong entry that they have passed is bank account debit to bank loan 30 million, right? So what should be the rectification entry? What should be the rectification entry? Now since this is an error in the financial statements, I will have to rectify that, right? So what I do, the rectification entry, understand one simple logic for a rectification entry. The rectification entry that has to be passed is the correct entry, that has to be passed, plus reversal of wrong entry. Meaning thereby, see, if you have passed wrong entry in the financial statements, first reverse that and then pass the correct entry. If you give the combined effect of that, it becomes a rectification entry. Now see how exactly. So first you have to pass, first you have to reverse this entry, okay, and then you have to pass this entry. Then you have to pass this entry. Now tell me the net impact. I will show it to you how it happens. It will be bank loan account debit 30 to bank 30. Right now, this is the reversal of the wrong entry, plus bank account debit to bank loan to equity share capital to securities premium. This is again 30, this is again 16, this is again 7, this is again 7. Now understand what happens. This bank and this bank gets cancelled against each other, right? Because in the bank, see, in the bank the treatment was correct. In the bank the treatment was correct. Now bank loan is debited by 30, the bank loan is graded by 16. So what should happen? The net impact is 14, right? So what happens here? What happens? The net entry to be passed is the net entry to be passed is bank loan account debit 14, bank loan account debit 14, to equity share capital 7, to securities premium 7. This is the rectification entry that you have to pass. Is that clear, everyone? Is that clear, everyone? See guys, whenever you have to pass a rectification entry in the exam, always remember this rule. Always remember this simple rule. Okay, that is the correct entry plus the reversal of the wrong journal entry. Okay, this is how you have to pass the correct entry. Is that clear? Now the question doesn't end here. Now, the question further goes on to say, that interest is payable on loan at 5% per annum. Okay, fine. Now an accrual of 6 months interest has been included in the trade and other payables. Now see why? Because I issued this instrument on 1st January 20x2, but the year end is 30th June 20x2. So from 1st January till 30th June, I will definitely have an accrual of interest, right? Interest payable, because that's a liability. I have taken the funds. Okay, interest payable. Now interest payable will be on equity and financial equity and bank loan both, or only on bank loan? Tell me. Interest will be equity and financial liability both, or only on bank loan? Interest will be on equity and loan both, or only on bank loan? Only on bank loan. Very good, Rishita. Now, so what is the interest amount? Tell me, what is the interest amount? So this is the first answer that we have to give the effect. This is the first effect that we have to give. Now, interest. What? Interest is 5% of what is the bank loan? 16 million multiplied by 6 months divided by 12 months. 6 months, how exactly? From 1 January x2 to 30th June x2, right? So now what is the figure that comes up? Can you please tell me? That comes to 5% of 16 into 0.05 is 0.4 million. 0.4 million. Okay? 0.4 million is the amount. 0.4 million is the amount of interest. But now see what the question says. Okay. The calculation of, here, the calculation of interest was incorrectly based on the nominal ledger loan balance. And what was the nominal ledger loan balance? Nominal ledger loan balance was 30 million. Nominal ledger bank loan balance was 30 million. So what was the incorrect interest calculated? Incorrect interest calculated is how much? 5% of 30 million multiplied by 6 by 12 is how much? 30 into 0.05 by 0.75 million. 0.75 million, right? 0.75 million is a wrong, is a incorrect interest. So now what is the rectification? What is the rectification? What is the rectification? So you have to reverse the excess interest charged, right? You have to reverse the excess interest charged. So how will you reverse? So where is interest going? Where is interest going? So first I will reduce the interest expenses, and then I will reduce my corresponding liability as well. Why? And where is this liability going? Trade and other payables. So I will reduce that impact also. So I will reduce finance cost, and I will reduce trade and other payables. So how will I reduce my cost? How will I reduce my cost? The rectification entry will be trade and other payables account debit to finance cost, right? How much? The amount is 0.75 minus 0.4 is 0.35 million, is 0.35 million. This is the rectification entry. Is that clear to everyone? Is that clear to everyone, guys? Come on, tell me. All the rectification entry I'll pass in green box. The rectification entry I'll pass in green box. Is that clear, everyone? Rishita, Mintu, and all others. Come on, guys, tell me. Now this completes our discussion, adjustment number 1. This completes our adjustment number 1. Okay, now moving on to the next adjustment. I believe adjustment number 1 is clear to all of you. Coming to adjustment number 2, which is very simple, very simple. Inventories as on 30th June 20x2 were initially valued at cost of 5.7 million. It says the cost of inventories on the closing year end is 5.7 million. Okay, fine. It says this includes, right here, inventories. It says the cost of inventory on 30th June x2 is how much? 5.7 million. Is how much? 5.7 million. Okay, so let me write here is $5.7 million. Now further, this includes 700 units of a cost of 1400 per unit. Okay, in order to sell these goods, these items, they need an additional processes cost this much, and the sale price is this much. What is the meaning of this one? It says this includes a particular unit, 700 units of a particular item, 700 units of a particular item. The cost and NRV is this one. The cost is 1400 per unit, and NRV is that is selling price is 1600 per unit, and minus costs to sell is 400 per unit. Now please see if this is going valid or not. Just see here. It says 700 units. 700 units. See, please focus on the number 700 units. The cost of which is 1400 per unit can be sold for 1600 per unit, and the additional cost is 400 per unit. Okay, means to sell, the cost which will be incurred is additionally 400 per unit. Okay, like see here, in order to sell these items, they need an additional process that costs 400 per unit. These are the costs to sell. NRV means net realizable value, means selling price minus the cost to sell. Selling price minus the cost to sell, that is 1600 minus 1400 is 1200. 1200 and the cost is 1400. So what is the valuation of inventory, cost or NRV, whichever is lower? So what is the valuation of this inventory? What is the valuation of inventory? So valuation will happen at cost, or NRV is 1200 per unit. So NRV is this one. NRV is this one. So now, what is the adjustment that I have to do? What is the adjustment that I have to do? The adjustment is valuation of inventory. Inventory valuation is dollar 5.7 million less is provision for loss is how much? Provision for loss is how much? Tell me. Provision for loss is how much? It is 700 multiplied by 1400 is the cost and 1200 is the net realizable value. That comes to how much? 700 multiplied by 200 is 0.14 million. What is the net amount? 5.56 is $5.56 million. Now comes the, what is the journal entry? What is the rectification entry? What is the rectification entry for this one? See, I have to reduce the inventory. I have to reduce the inventory and increase my costs. So what I'll do is, the entry will be costs of production count debit to inventory. How much? 0.14 million. I'll pass in green. Is that clear, everyone? Is the second adjustment clear to everyone? Guys, come on, tell me, is it clear, everyone? I don't want to go fast. Come on, guys, tell me, is it clear, everyone? Now, coming to the third adjustment, it says what? At 30th June 20x2 means at year end. At year end, print company has a contract to purchase 22,500 electrical components over the next 3 years. Meaning thereby I am bound to purchase 22,500 units of a particular product over the next 3 years, the cost of which is 450 per product. The cost is 450 per product. These purchases are made at a constant rate, means the rate is fixed. The rate is fixed. These components are no longer required for their initial purpose, but do have an alternative use. Okay, means it says that the purpose which I initially planned, that purpose is no more valid. Okay, so I don't need these. Okay, but yes, I do have an alternative use of it, because see, understand why I am assessing alternative use. Why I am assessing alternative use is I am bound under this contract. I am bound under this contract. Okay, since there is a contract, I cannot say that I will not purchase. I cannot say that I will not purchase. There is a obligation for me to purchase. There is an obligation for me that I have to purchase it. Okay, now okay, it says that but they do have an alternative use which will require additional manufacturing cost of 600 per component. Okay, thereafter each component can then be sold for 900. Alternatively, print could cancel the contract, okay, and pay a penalty of 4 million. Any adjustment resulting this from should have it need to be made to admin expenses. Now understand, contract to purchase. You have to think like a rational person, that's all, nothing else. So basically what happens, you have a contract to purchase 22,500 units over 3 years, okay, at 450 each. Now you have two options. First option is buy the products and sell it. Now if I will buy and sell, what is my profit or what is my loss? Okay, what is my profit? Rishita, don't understand. Okay, you are saying provision will be there in liability, okay? But understand the logic behind that, okay? Understand the logic behind that. Again, Tamanna, yes, it is a case of onerous contract, but let me prove it first, okay? All of you are correct, but let us discuss on this, okay? Option 1 is buy and sell. Option 1 is cancel. Option 2 is cancel and pay penalty. Now, as a rational person, which option will you want to go for? The option where my cash is, my loss is less, where my loss is less. See, in this case, I do have a loss of how much? 4 million. Yes or no? In this case, I have to pay a penalty of 4 million and I can cancel the contract, no further liability. So I have to pay a penalty of 4 million. So this 4 million is a loss. Tell me yes or no? I'll write here. The loss is 4 million here. The loss is 4 million here. But if I buy at what? Buy at 450 plus I incur a further costs of, what is the further cost to be incurred? 600 and then can be sold for 900. If I incur a further cost of 600 and then I will sell it for 900, then what is my loss per unit? See, my cost of production is how much? 1050. 1050 is the cost of production, but I can sell it for 900. So means 150 per unit is the loss, multiplied by 22,500 units. So what is the total loss? Is 3.375 million. Now guys, tell me, which one would a rational person go for? 3.375 million or 4 million loss? A rational person will go for which one? A rational person will go for which option? Buy and sell or penalty? Buy and sell, right? So this is the loss. So you have to analyze these cases. What a student sees that, oh, penalty 4 million. Let's make a penalty of 4 million. No. You have to think along the lines. You might have to think between the lines also in some cases, okay? So please read the question properly. That is the need of the hour, guys, okay? Now, what is the treatment for this one? Now read the question again further. Any adjustments, the question says any adjustments resulting from this should be made to admin expenses. Now understand, since this is a contract where I will definitely have a loss, so these type of contract are called as onerous contract, which was rightly pointed out by Tamanna. Onerous contract. These type of contract are called as onerous contract. Now, we do have to make a provision for onerous contract, okay? We have to make a provision for onerous contract. So what I will write here, admin expense account debit to provision for onerous contract is 3.375 million. Now again, since this is rectification entry, let me pass this in the box. So I believe adjustment number 3 is also clear to all of you. Come on guys, please tell me. Adjustment number 3 is clear to all of you. Come on, please confirm. Then only I'll move on to adjustment number 4. I will require a confirmation from all of you. What, Muskan? What? How will you know? Means, tell me, what is your query? The provision has been made or not? Okay, is the question saying that we have made the provision? Understand, whenever there are additional information, means the effect of these is not been given, or there is some mistake done, okay? See, if these adjustments are silent, means the effect of it is not given. First point. Second, if the question states that the Impact is given, but this is how it has been given. So it means there is a mistake. Understand? See here, the question clearly says it was recorded as this thing, means there is a mistake. Now again understand, see, the question doesn't say anything. In this case, the question doesn't say anything, means this impact has to be given. In this case, the question doesn't say anything, means the impact has to be given. Additional information, Muskan, clear? Is that clear, everyone? Okay, fair enough. Now moving on to point number 4, adjustment number 4. On 1st July 20x1, the directors of print company decided to sell a piece of machinery, and the asset made the criteria to be held as to be classified as held for sale. Means this is a question of which standard it is, guys? IFRS. Tell me which is the IFRS. I remember discussing the name of the IFRS in the class, though it is not required for the exams, but yes, just for the sake of knowledge, can you please tell me the name of the IFRS which covers the non-current assets held for sale? IFRS 5. Very good, very good. Now the machinery which cost $2.4 million had a carrying amount of $1.5 million on 1st July 20x1. Okay, now what does it say? Held for sale, non-current asset held for it says the cost is $2.4 million, and the accumulated depreciation is $0.9 million, and hence the carrying amount on which date? Carrying amount on 1st July 20x1. 1st July 20x1. On 1st July 20x1 is $1.5 million. It is classified as held for sale on what date, guys? Come on, tell me. Okay. Now on 1st July 20x1 itself, the asset is classified as held for sale. Now let me write here. Okay, now please answer, guys. Since the asset was classified as held for sale on 1st July 20x1, my question is, will we charge the depreciation for this year on this asset? Will we charge the depreciation on this asset for this year? Will we charge depreciation? All of you, come on, guys, tell me. No, the depreciation ceases as we classify the non-current asset as held for sale. The depreciation ceases. Okay, since the asset, the non-current asset was classified as held for sale on 1st July 20x1, that is the opening date, hence no depreciation, no depreciation for current year ended 30th June 20x2. Is that clear, everyone? Now further, okay, at that date the fair value less cost to sell was $1.14 million. Okay, it says the fair value less cost to sell was, see what happens if you can recall that whenever the asset gets recorded classified as held for sale, we record the asset at fair value less cost of sale, right? We record the asset at fair value less cost of sale, and whatever is the difference between the carrying amount and the fair value less cost of sale on each reporting date, we transfer it to the P&L as impairment loss. Now the carrying amount was 1.15, and it says the fair value less cost of sale is dollar 1.14 million. Now it says, see, there is not, the question doesn't say that on the year end, that is 30th June 20x2, the asset was sold or not. It is not given, but the question gives a hint. The question gives a hint. The machine was sold for 1.1 million after selling cost on 1st July 20x2, means immediately after the year end date, the machine was sold. Now tell me, applying the principles of IAS 10, events occurring after the balance sheet date, definitely the financials will not go for approval on 1st July 20x2. Definitely it will take some 10-15 days time. So on the date of signing of the financial statements, I will have this data that the asset has got sold for 1.1 million. So on 31st of March, no, so 30th of June, when I am calculating the impairment loss, will I consider 1.14 million as the fair value less cost of sale or 1.1 million is the question. Will I consider 1.14 million or 1.1 million? Tell me. Applying the principles of IAS 10 on events occurring after the balance sheet date or reporting date, if the conditions existed, yes, conditions existed because I have to sell, okay, and you get a confirmation after the balance sheet date, but before the approval of the financial statements, then those events becomes adjusting events. Okay, so we have to take fair value of 1.1 million. Now, so what I'll say the fair value less cost of disposal is dollar 1.1 million. Now what is the gain or loss? Impairment loss of how much? 0.4 million. What is the journal entry for this one? What is journal entry for this one? Provision impairment loss account debit to provision for impairment loss dollar 0.4 million. Now this is a rectification entry, so I have to pass in the green box. Is that clear, everyone? Is that clear, everyone? Is that clear, everyone? Is this adjustment clear, everyone? Sir, in second adjustment, I am asking to know how to know provision we have to make. Guys, you need to understand here that, please understand, guys, that what happens here on the second part, in second adjustment, how to know where to make a provision. Again, understand, Muskan, that see, we have to value the inventory at a lower of cost or NRV, right? So there is the cost, when the cost is lower, we have already recognized that cost, so definitely we'll continue at cost. But when the NRV falls lower than the cost, we have to reduce the value of inventory by making a provision. That's what it happens. Right? So please do it accordingly, guys. Now, fifth adjustment is, print company's policy is to depreciate the plant and machinery at 15% per annum on cost and to present the depreciation charge to cost of sales. Okay, but before I go on to this adjustment, is one more adjustment that I missed. No adjustments have been made to take account of classifying the machine as held for sale. Means what? See, when we classify the asset as held for sale, it is reclassified from non-current to current. When we change the classification as held for sale, we have to reclassify the asset from non-current to current. So what will we do here is, we have to reclassify and record the machinery as current asset. Is that clear, everyone? Is that clear, everyone? Okay. Now, coming to fifth point. Print company's policy is to depreciate plant and machinery at 15% per annum on cost and to present the depreciation charge in the cost of sales. Now let's depreciate the other assets. The plant and machinery, the cost was how much? This one, and depreciation is how this much. Now understand. Plant and machinery cost and accumulated depreciation was 16,200 and 7,290. Okay. Now minus. See, definitely it will have the asset, since the asset which was classified as held for sale, the classification has not changed. We are changing it now, so definitely it would have been included here. It would have been included here itself. So we have to remove from here. Why? Because there should be no depreciation on that. There should be no depreciation on that. So I will remove the cost 2,400 and I will remove the accumulated depreciation 900. Right? So what is the balance that coming here? 16,200 minus 2,400 is 13,800 and 7,290 minus 900 is 6,390. Right? So what is the, now just tell me, see the question and tell me, is it 15% on the cost to present the, okay, 15% is on cost, not the WDV. 15% is on cost, not WDV. 15% on cost. Okay, so now what is 15% of cost? Okay, depreciation for current year. What is the depreciation for current year? 15%. 13,800 multiplied by 0.15 is 2070. Is 2070. So now what is the net balance? What is the net balance? For 13,800 minus 6,390 minus 2070 is 5,340 is the net balance of PPE. Is that clear, everyone? Is that clear, everyone? Okay, now so we have to record this depreciation also. So let's record the depreciation also in the books. Again, let's write here depreciation. Journal entry is depreciation expense account debit to accumulated depreciation. Right? Now the amount is 2070. Okay. Now this is the entry for from sir, from where did 900 come? Now see here the question. Read the question. Read the question. See, it says see, just a minute, I'll highlight it. The machine costs 2.4 million. The machine costs 2.4 million. Okay, see, I have written here cost 2.4. Now the carrying amount of 1.5. So 2.4 minus 1.5 is how much? 0.9 is 0.9. That is the accumulated depreciation. So now if you have to give the net impact, if you have to calculate the net carrying amount of this one, is it comes to how much? 1,500. Right? Is that clear? So that's the entry. Now coming to the, this entry is also clear, I believe. Now coming to the sixth one, tax refund for the year has been estimated to 2.53 million. The tax estimate is estimated to be 2.53. Now just see in the question, do we have any excess or under or over provision coming from the previous year? Under or over provision of tax coming from the previous year? Under or over provision of tax coming from the previous year? No, not coming, not coming. You remember why I am seeing the under or over provision? Because if there is an under provision or over provision in the previous year, this will impact the current year tax expense or tax income or tax credit. Is that clear? Now, so what we, since there is no under or over provision coming from the previous year, and there is a tax refundable up to 2.53 million for the current year, so what will I say? What will I do here? I will record as an income and an asset. I will record as an income and an asset. Tax. I will record tax refundable account debit to tax credit, which will go to P and L. How much? 2.53 million. Now again, this is your final entry, so I will pass the green box. Tell me guys, is it clear everyone? Is it clear? How many green boxes? One. Okay, now let me write that. How many green boxes? Okay, 1, 2, 3, 4, 5, 6. Basically, one for each, I believe, if I'm not wrong. One for each, right? One for each adjustment. There is one journal entry. Is that clear, everyone? Is that clear, everyone? Please clarify on the tax gain again. Now tell me, there is a tax refund. Tax refund. Okay, might be the company would have been loss making. Okay, though I don't know, but the company would have been loss making, and as per the laws of this country, if your company is a loss making, if your company earns profit, the company pays tax to the government. If the company incurs losses, that might be the case that the company gets the credit from the government. Might be the case. Might be the case. Okay. So that's what it says. There is a tax refundable from the government up to 2.53 million. So tax refundable means I will recover. Recover means it's my asset. So that's the reason I have recorded a tax refundable asset. And since I am recovering it from the government, it's an income for me. Clear? Can you also discuss on the mark allocation in the current sum? See, marks allocation is from this point of view. See, understand here. Marks allocation is given here. The requirements now is to prepare SOPL and SOFP. SOPL is for 8 marks and SOFP is for 12 marks. Okay. Each line item will have 1 mark. Wherever there is an adjustment, there is separate marks for that. Okay. Now, so basically, these adjustments will how well you can prepare these adjustments, or you can give the adjustments the effect in the financial statement, that is the P&L and the SOFP, will fetch you marks. Okay, definitely there is an own figure rule. Yes, there is. We have to show all the workings. Okay, we have to show each and every workings. Okay, now there is an own figure rule that if you show calculations and you consider one figure wrong, then subsequently if you are showing the formulas appropriately, even if the answer is wrong but your logic is correct, you will get marks for that. Your logic is correct, your process is correct, you will get marks for that. Okay, so there is an own figure rule. But now let's start to solve this question in the ACCA practice platform now. Okay. So first we'll prepare okay. So requirement A is what we are preparing now. Okay, is that visible, guys, all of you? Is that visible to you, all of you? Statement of profit or loss. Okay, now so what, let's draw the format first. Revenue, then costs of production, then gross profit. Okay, Muskan, that's given in the question. What do you want me to explain that? Okay, see, that's clearly given in the question. If you read, 2400 is the cost, 1.5 million is the carrying amount as of today, and so 900 becomes zero point 0.9 becomes the accumulated depreciation so far. Please read the question. Please read the question, Muskan. Okay, gross profit, and then comes given in the question. Production cost, admin, distribution, and distribution costs. Okay, then finance cost, or here you can write here operating profit. Operating profit, and write finance costs, and write here profit before tax, and write tax, and write here profit for the year. This is the pro forma. Okay, now this is the pro forma of P&L. Now let's write the figure. Now see, I believe all of you have written these rectification entries in your notebook. I believe all of you have written this rectification entry in your notebook. Now tell me, you have to tell me. What I will do is, first I will write the figures as it is from the trial balance. Revenue is 97,400. Then cost of production given in the trial balance is 60150. Admin expense is given as 29570. Then distribution expense is 7200. Then finance cost is 750. Then tax expense is not, tax credit is given. Okay, so let me write tax credit, tax income or tax credit. Tax credit is given as okay, that is also not given as of now here. Okay, now this is what is given in the trial balance. Now what you have to do, tell me one by one, tell me the impact of the journal entry that we have passed in these line items. Okay, for P&L, from a P&L perspective. Okay, now I will go one by one. First one is for, see, I will show it to the screen, that screen also. First one is trade payables and other payables to finance cost 0.35 million, meaning thereby I have to reduce the finance cost by 0.35 million. I have to reduce the finance cost by 0.35 million. Okay, now do it off here. Let's reduce the finance cost. Let's reduce the finance cost, that is 350. Okay, that was in millions. Now I'm converting it to thousands. Okay, converting it to thousands. Okay, now the next here, second adjustment is cost of production to inventory. Cost of production. Okay, the impact will not go directly, but the impact will go indirectly. How exactly? I will show it to you. Okay, just park it for some time. Coming to third, admin expenses is 3.375 million. Admin expense we have to increase by 3.375 million. Admin expense, sorry, we have to increase by 3.375 million. Okay, that is 3375 I have to increase. Now further if I go here, impairment loss should increase by 0.4 million. Okay, so now I will increase the impairment loss again. Impairment loss impact will go to cost of production. I will come here and show it to you guys. So the impact will come here plus 400. Okay, now the depreciation is 2070, so I'll write here depreciation. Impairment loss is depreciation. Okay. Then tax refundable is 2.53, so I write here 2530. Okay, now I think that's all. Nothing else. Okay, now tell me cost of production means what? When we have to calculate the cost, when we have to calculate the cost of production, it means what? Means opening plus cost of production incurred during the current year minus closing inventory, right? So we have to do the impact also. So what is the opening inventory plus opening inventory? Opening inventory is how much? Tell me, opening inventory is how much? Opening inventory is how much? 6850. Okay, opening inventory is 6850. Okay, then minus closing inventory is how much? Closing inventory is how much? Closing inventory is how much? We calculated it, right? Somewhere we calculated, I remember that. 5.56 million. So that comes to 5560, right? 5560. No, it's not 5.7. 5.7 was given, but we have made an adjustment also. Okay, so now let's tell me what is the final figures of revenue. The final figure of revenue is, this one, 97,400 only. Now the cost of production is how much? 60150 plus 400 impairment loss plus 2070 is depreciation plus 6850 is the opening inventory minus 5560 is the closing inventory. That comes to 63910. Is that clear? So revenue is this one, cost of production is this one. So what is the gross profit? Revenue minus cost of production is the gross profit. Now coming on to admin expenses. So admin expenses how much? 29570 plus 3375 is this much. Now distribution expense is directly 7200. Now operating profit is how much? Operating profit is this minus this minus this is negative 6655. Negative 6655. Okay. Now finance cost is how much? So this plus this is 400 is the actual finance cost. So profit before tax is this minus this 7055 is not a profit, is a loss, and it's not an operating profit. Again, it's an operating loss. An operating loss. It's a profit before tax. No, it's a loss before tax. It's a loss before tax. It's loss before tax. It's loss before tax. Okay. Now, that's the challenge. Basically, when you solve an ACCA practice platform and projecting screen alongside. Okay, so that's the challenge that might create, server might create. Okay, don't worry at all about it. Okay, it's not happening. It's not happening. Okay, so no worries. We will solve in this one self. Worry at all. With this screen. But I believe you guys understood how to access the ACCA practice platform by now, right? Let's solve it fastly here. Revenue, costs of production. Okay, comes the gross profit. Okay, then comes admin expenses. Then comes distribution expenses. Then comes operating loss, it was right. Then comes finance costs. Then comes loss before tax. Then comes tax credit. Then comes a profit for the year, or loss for the year, basically loss for the year. So if I have, what I've done is, if I here responding now, it was 97,400. It was how much? 60150 plus 400 was on account of impairment loss. Okay, then plus 2070 was on account of depreciation, plus 6850 was on account of opening inventory, then minus 5560 was on account of closing inventory. So now total comes up, what is the total? Can you please do it of total? Can you please do total, guys? 60150 plus 400 plus 2070 plus 6850 minus 5560 is 63910. Is 63910 minus 33490. Now admin expenses was how much? 29570. Okay, now not here, I'll not write. There was an adjustment here, so that's why I'm highlighted in green. So admin expense was 29570 plus there was an adjustment for 3375, right? On this one for onerous contract, okay. So it is 29570 plus 3375 comes to 32945. Now distribution expense is 7200. It will be coming to as it is. Now what is the operating loss? 33490 minus 32495 minus 7200 is 6205. Is 6205 is the operating loss. Finance cost is how much? It was given as 750, but minus there was an adjustment of 350, so it comes to 400. Now this one comes as 6605. Okay, the tax credit is how much? 2530, right? So it 2 plus 2530 4075. Can you please confirm if everything is correct, guys? $33490 minus 32945 minus 7200 is 7055. Now it is 2530. So what is the loss for the year? Plus 2530 is 4525. 4525 is the loss for the year. This is the final answer. This is the final answer. Is that clear? Is P&L clear, everyone? Is P&L clear, everyone? Is P&L clear, everyone? Come on, guys, tell me, is statement of P&L clear, everyone? This was requirement 1, statement of P&L for the year ending. Okay, now coming to the requirement number B. Though we are unable to solve in the ACCA practice platform due to some, I think the ACCA practice platform is not responding as of now. See here, not responding. Even they have given a sad emoji here. So no worries, but we will not give up. We will solve here itself. But yes, I believe you have understood how exactly to approach ACCA practice platform, and I have to solve it there, right? So even though ACCA platform can show a sad emoji, but we will not be sad. We will be solving the questions as it is, right? So let's try to solve the question. So we have to prepare the statement of financial position as on or as at 30th June 20x2. Okay, now let's prepare it off. Now, so we will start with what? We will start with non-current assets. We will start with non-current assets. In the non-current assets, we will write first what? We will write plant and machinery. Plant and machinery, right? What was the balance, guys? Can you please tell me what was the balance? We calculate the balance, right? See the net balance that we calculated, 5340, 5340, right? 5340. So let's write it here. Let's write it here. PPE, plant and machinery, is 5340. Then comes land. What is the value of land that is given in the question? It is 45,000. So what I'll do here is I will write here 5340, 45,000 comes to 5340 plus 45,000 comes to 50340. Guys, there is a marks for presentation as well in the exam, so don't think that you just need to write the numbers, but the presentation is also important. Is that clear, everyone? Now, so this is the non-current assets. Now, any other non-current assets? No. Coming on to current assets. So in current assets, what will we do? So first we'll write what? Inventories. Inventory in the order of their liquidity. So inventories, what is the value of inventory that we calculated? 5560, right? Inventories is 5560. 2560. Then what else? Let me see the trial balance in the question. I'll show you the trial balance also in the question, and I'll show you the trial balance. Just give me a minute. This is the trial balance in the question. Now, equity, share capital, retained earnings, no land, no trade and other receivables, right? So let me write here trade and other receivables. Trade and other receivables 25010. I believe there was no adjustment to trade and other receivables, right? Trade and other payables, there was an adjustment, but it is in the liability, so no cash and bank will come here. But any other thing that will come here, any other thing that will come in the this one in current assets, is there any other thing that will come? Tell me guys, come on. It will come, yeah, this one, machinery held for sale was 1100, right? Machinery is held for sale will come. Very good Mintu, very good. Now further after that it will come cash and bank, that is at the last. What is the cash and bank balance? 4700. So can you please add it up? That comes to 5560 plus 25010 plus 1100 plus 4700. 36370 is 36370. Please add it up. Plus 50340 86710 is 86710. Guys, just ensure that all the adjustments are given properly. Can you please check all the adjustments are given properly or not? Can you please check all the adjustments are given proper? Okay, I'll see present my screen. Can you please ensure all the adjustments are given coming up properly here or not? All the adjustment coming properly or not? Is there any asset to be recorded? Let's see the entries. Okay, tax refundable. Okay, tax refundable is also an asset. We have to show it here. Tax refundable also we need to show. Okay, tax refundable also we need to show, and I'll show it just after trade and other receivables. Okay, I'll write here tax refundable. Plus 2530. So this balance becomes 36370 plus 2530, 38900. 38900 plus 50340, that is comes to 89240. Any other thing? This is done. This is not impacting this one. Impairment loss we have covered. Considered admin expenses provision is a liability. Inventory we have covered. Trade and other payables is a liability. No, fine. So this completes our asset part, right? Financial position part. Now coming to liabilities. Equity and liabilities. Equity. Equity is how much? 29600 is the balance. But don't forget that in the current year we have issued how many equity shares? 7 million, meaning thereby 7000 equity shares we have issued in the current year, right? When in the adjustment number one, remember adjustment number one, see the first entry that we passed. Bank loan account debit to equity share capital 7, securities premium 7, right? So bank equity is 7000, so 29600 plus 7000 comes to 36600. Then comes the what next is other components of equity. Is share premium, basically is share premium. The balance of which is 15,500. The balance is 15,500 plus again it is also 7,000. So 15,500 plus 7,000 is 22500. 22500, right? Then comes retained earnings. Retained earnings, okay, so it is given, the balance is given as 11,470, but we have to give the impact of the current year loss also, which is how much? The loss for current year is 4525. The loss for current year is 4525. So 11,470 minus 4525 is 6945. Is 6945. Okay, this is the equity part. Now coming to non-current liabilities. Non-current liabilities. Now coming to non-current liabilities. See, equity is done, retained earnings done, assets done. Okay, now bank loan 30,000. Okay, now what was the amount of bank loan? Tell me, guys. What was the amount of bank loan? Bank loan was 16,000, right? Bank loan was 16,000. So bank loan is also done. Trade and the receivables done. Payables, trade payables is a current liability. Done. Now any other thing in non-current liability? Tell me any other thing in non-current liability? Yes, provision for onerous contract. Now what was the amount for provision for onerous contract? 3375. But now this onerous contract of 3375 has to be settled in 3 years. So what is the amount of non-current? Minus 3375 divided by 3, that is this amount of divided by 3 will be settled in the within 12 months, so it becomes current, the remaining becomes non-current. So 3375 into 2 is 2250 is the non-current portion of it. Is the non-current portion of it. Is that clear, everyone? Is this part clear, everyone? Is this part clear, everyone? Come on, guys, tell me. Is this classification of current and non-current clear to everyone? Tell me, guys, come on. Very good. Okay, now coming to current liabilities. Now what will come in current liabilities? Again, trade and other payables. In trade payable there is an adjustment, if I'm right, that was 4170 minus adjustment was for finance cost of 400, not 400, 350. 350 I have to reduce the finance cost. See here, if you have forgotten it, just for the sake of your memory also, trade payables there is an adjustment of 0.35 million, right, for the excess interest cost that is charged. So I will reverse that from here. 4170 minus 350 is 3820, is 3820 is trade payables. Then onerous contract, there is a provision for onerous contract up to 3375 by 3 is 1125. Now any other thing? I don't think so. Just can we add it up? 36,600 plus 22,500 plus 6,945 plus 60,000 plus 2250 plus 3,820 plus 1,125, 8,924. 8,924. Is that clear, guys? All of you? Is that clear, all of you? Come on. Is that clear, all of you? So we have solved the question, this requirement basically. Though we plan to solve an ACCA practice platform, but since the platform has some error, so we have to solve in here. But the understanding is clear. See, you have understood how to approach ACCA practice platform, and you have understood how to solve a question on ACCA practice platform, and you also understood the conceptual understanding also, right? Is everything clear now? Anyone having any queries in the question that we've discussed today? Anyone having any queries in the question that we've discussed today? Sure, I'll do that. P&L workings. See, workings is already shown here. I have passed all the journal entries, right? And wherever the adjustments was required, I have shown it here like this. Now you do have an option definitely. is visible. I believe everyone, the screen is visible to all others, right? Now what I have done here is I have shown the adjustment here. Now it depends upon you. If you want to show it separately, the cost of production, saying giving the narration for each and everything, that is also one of the way. Okay, that for you can give an separate working note for this one, for this one, for for this one. Okay, you can give it off, or you can show it this way also. You will fetch full marks for that. You will fetch full marks for that. There's no deduction of marks. Okay, that's just a way of presenting. That's all. Is it clear, everyone? Come on, guys, please confirm if it is clear to everyone. Machinery held for sale entry. So what's the entry? That's an impairment loss entry that has to be passed. That's all. And we have to reclassify from non-current to current. Okay. So that's all for the day, guys. But before you guys leave, first of all, guys, if you see, as I have told it at the very initial, it says that this is a practice session, not a revision session of the concepts. So if you want to revise the concepts, and I will strongly recommend you to revise the concepts. So all of you, if you have not watched it, please go and watch the revision sessions. Please go and watch the revision sessions. Okay, please go and watch it off. Okay, now it's of around 12 to 13 hours. In 12-13 hours, I have covered all the concepts, plus also I have discussed the mistakes that you have to avoid in the exam. Okay, and important questions also I have taken up there in the class. Please go and watch that. Now there is a query coming up here. Can we show the workings of on P&L as a reference in working note 1? Yes, you can do that. Yes, you can do that. As I told here, that you can write working note number 1, 2, 3 and accordingly show it off. So that's also acceptable. Do we need to show accumulated depreciation in non-current assets? Accumulated depreciation gets netted off in the non-current assets in the balance sheet, okay, or in the statement of financial position. Okay, that's all for the day, guys. I hope you enjoyed the session. Thank you all. Bye bye.